The JMF Advisors Show is a podcast for business owners, C-suite executives, and entrepreneurs who are looking to build, grow, or even exit a business.
We bring in some of our best financial advisors to interview experts on business best practices, hot topics, and sprinkle in some tax and accounting help.
If you're a business owner, startup founder, CFO, or just starting your side hustle, this podcast is for you.
All right. Hello, everyone, and welcome to another episode of the JMF Advisors Show. I'm Kim Smith, and I'm a tax shareholder at JamisonMoneyFarmer. And I'm joined today with my friend Lauren, friend and coworker, and she's a tax manager at JMF. Hey, Lauren, I thought to kind of open up and talk about our topic today, I might tell a little quick story, if that's okay.
Yes, please do.
All right. So do you prepare yours and Charles's tax returns?
Absolutely.
Yeah. Does he bother you about them?
No, he's been trained to say, let me ask my accountant.
Oh, well, that's good. Mm-hmm. And that's not someone else. That's you, right?
Right.
Well, Ken, for some reason, a couple of years ago, he got it in his head that I needed to prepare our tax return like early February. And we're just a little bit busy in early February, right?
Right.
So I did. I took a Saturday afternoon. You know, it's not like we have a very difficult return. And so I quickly prepared our return, e-filed it, and let it go. Well, about 3 weeks later, I come home from work, and Ken is almost just standing at the door. And I'm like, what are you doing? And he said, we got a letter. And I was like, well, we usually get mail, you know. And he said, no, we got a letter from the IRS. I think it's about our tax return.
Oh, no.
And he had all this panicky look in his face, you know. And so I just kind of shrugged it off, you know, because we're used to getting those all the time, right? Mm-hmm. Well, I opened it up, and it was nothing. I think maybe I had transposed a 3 or a 6 or something, and they were changing our refund by, $3. The point of the story is, while we are used to getting and dealing with the IRS, our clients and taxpayers in general kind of get worked up when they get a notice.
Right.
Kind of get a little panicked. So we thought we'd do, our podcast topic today would be IRS notices, how to prevent them and what to do when you get one.
Yes, that's a great topic.
Yeah. So I know that you do a lot of work responding to notices on behalf of clients. What are some common reasons for notices?
The most we see are matching notices. So the IRS gets reported on IRS payer documents, your wages on W-2s and that sort of thing. So they're looking to match those items on their records to what you file on your return. And if those don't line up, that can result in a notice. Also, if your payments that you have, so they have a record of all your tax payments, withholding, estimated tax payments, extension payments, if those don't match up, they're going to send a notice. And also penalty and interest notice. So, you know, sometimes we have clients that say, yeah, I paid all my estimated taxes, but they didn't pay them timely. So they're going to assess some penalty and interest if you didn't pay them, you know, when you're supposed to quarterly.
Okay, so you mentioned payor documents. And so, like you said, that's W-2s, 1099s, anything that you get that's also filed with the IRS. So what you're saying is the IRS takes those, they've got a record of all of those items for the taxpayer. And if one of those items doesn't match what's on their return, then it could generate a notice showing additional tax due or
That's correct. Mm-hmm. So if it doesn't match up with what's on their records, they're going to send a notice saying, hey, I don't think you reported this 1099 income. And also it could just be that it wasn't reported on the line they thought it should be reported on. Right. You know, sometimes people get a 1099 and it goes on their Schedule C for business income if they're self-employed, and sometimes it goes on the other income line. So even that sort of thing can contribute to the notice.
Right. So not necessarily, it may not generate any additional tax due. It may just require us to send a letter.
Right. Mm-hmm.
And let them know where it should have gone versus where it was reported on the return.
Right. A lot of our notices result in zero tax due. Sometimes it's just a miscommunication or understanding of, you know, where the income is reported.
Right. So kind of like Ken getting all panicked. Our clients shouldn't necessarily get all panicked when they get a notice in the mail.
Right. The first thing to do, I know it's alarming, but don't panic and always address it immediately. because you have a limited time. And when you get the notice, if you read it, it says, if we don't hear from you, we're going to go ahead and make this assessment and proceed with collecting the additional tax. So you don't want to put it off or ignore it, because it is definitely not going away.
No. And, it's so funny. A client will bring in a notice, and it'll be like the last notice before they do something about it. And they're like, well, I didn't get any of the other ones, which I guess maybe walk us through, like, you'll get a bill. Mm-hmm. The first notice is just a bill telling you there's something wrong. Mm-hmm. And you can address it at that point. Maybe there's not anything wrong. But then probably about 60 days later, you'll get another notice, right?
Right. They're eventually going to give you an opportunity to respond, and that's a bit of time. But then eventually they're going to levy.
Yeah.
And they want that tax due.
So you can't bury that thing under a rock.
Right. You don't want to wait till, they're ready to levy something, which you usually have some time to respond and resolve, but it's best to address it right away.
Yeah. And I think it's important, too, when people get their W-2s or they get their 1099s, that they look at them.
Right. Correct.
Because it could be that they're incorrect.
Right.
From the person that you got it from. And it could be that maybe the name is misspelled on it, or it could be the Social Security number may be incorrect.
Correct.
Yeah.
Mm-hmm.
So one way to prevent a notice is just to review your I can't tell you how many times I get documents from clients and they've not even been opened.
Right. Mm-hmm.
Yeah. Which we review them, but they should take, that's just extra time.
Right.
Yeah. And I think people need to be careful, and they need to put all of the documents that they receive in a safe place and accumulate them all at one time, so that when you give your documents to your tax professional, that you have all of them.
Right. Another thing I've trained my husband to do is when they come, we put it in a folder. It's important that you have all those documents and you give them to your accountant.
Right.
And they're easy to lose, for sure.
Yeah. Yeah. I mean, pretty much if it says important tax document, it needs to go in that folder, right?
Mm-hmm.
Yeah. And then sometimes people will get 1099s, and then inevitably they're amended, and so they receive another one. So it's also going to be important, maybe don't file your return the minute you think you have all of your documents. Give it a couple of weeks to make sure that you're not going to get some amended 1099s that would affect your return.
Correct. And often the most often corrected form I see is the 1099 from your investment broker. They often amend it, a few months later, and they move some income around. And if you've already filed, sometimes we'll say, it doesn't really result in tax due, so we're not going to amend, but you're going to get a notice that, you owe $1 or $2.
Yeah, it's probably a good idea if you have an investment consolidated 1099 that you just hold off filing closer to the deadline.
And you usually learn that lesson. It usually happens to the same people every year. I don't know why. So usually after that happens, we're just like, we're going to wait to file until, a certain date to make sure that form is not corrected.
Yeah. One other thing that I think that we're making a push for our clients to do is to set up an account with the IRS. Mm-hmm. And I think they're called, what is it, an ID.me?
ID.me is, I think, the software you set it up through, but it's basically just an IRS online account that you can set up at irs.gov. When you go to the first page, there's something you click that takes you directly where you can go. Do
they have to have any special information to set that up, or?
I think it usually requires their driver's license and a selfie is the easiest way to set that up.
So they're still doing the selfie with it?
Yes, I think I know they had some some pushback on that, but it's still a way you can set it up. And I think there may be alternate ways, but I'm not familiar with it yet. But it should be easy.
So what all can they see when you set up? I don't think it takes that long to set it up, does it?
No, it doesn't.
Okay. And so they set up their account, and what all can they see with that account?
With their account, they can see all the payments they've made, which is often important. We've had some issues with quarterly payments and payments we mail in being processed. So now that you have this account, you can pay all of those payments online through that account, and it directly goes, applied to your account.
And they can even schedule those, can't they?
Yes. Mm-hmm.
So in other words, if we give them quarterly estimated tax payments of $5,000 a piece, and on the due dates or right before the due date, they can go in and they can just schedule that payment so it automatically just drafts out.
Right.
So they don't have to send in any of those vouchers. They don't have to remember to do everything because they've set it all up at one time.
That's right. And with since the pandemic, we've had a lot of IRS delays. So we're even seeing, mailed in checks not processed timely, and that's resulting in notices. So paying online is definitely something you want to do. Start thinking about.
And can they, in addition to seeing their estimated tax payments, can they also see what's been posted to their account? I mean, can they pull a transcript for themselves?
They can access their transcripts, which a transcript is really important. There's several types you can access, and one is your wage and income, and that shows you all of those income from your IRS 1099 payer documents. And so that's really nice to see, like your W-2, but it doesn't give you all your information. Sometimes you don't have, if you have non-covered stock sales, you don't have the basis information. So you really need your 1099 from your broker.
Right.
But it's a great tool, especially if you've lost that W-2 or a certain form.
Yeah, the other thing that it wouldn't show would be any kind of state withholding.
Right. Mm-hmm.
So you really couldn't use that to prepare your state return or anything. It's just probably a good double check for the information that they already have.
That's correct.
Yeah. Mm-hmm. Okay. Well, I guess the other thing, what are some other things that they could do to avoid getting a notice?
Just make sure you collect all your tax documents and keep good records of when you make your estimated tax payments or an extension payment, and also date. The date you send it is important. Right. It's not really important if you send it before, but if you send it later, that can result in interest and penalties.
Yeah. And I think it's also important to let people know that there's a lot of spam that goes around now. So if the IRS is going to adjust your return, they're not going to call you on the telephone.
Right. They're not sending a sheriff to your house because you owe taxes.
Right.
Yes, that's important. There are a lot of scams out there. They're not going to call you. They're not going to text you. They're not going to email you. And they're not going to contact you through social media. They're going to send you a letter.
My 70-something-year-old mother, a few years ago, I was telling her, about people calling and pretending they're the IRS or whatever. And she said that she got a call and it was someone pretending to be the IRS. And so she said, she yelled in the phone, "My daughter's a CPA and she told me you're not real." And she hung up.
Yes, you should definitely immediately hang up. Never give them information.
Right. We also have state notices. So,
Correct.
And what people don't realize is, the state can act on a notice quicker than the IRS can.
Correct.
So I know with state notices, they're going to send you a notice, and it's just kind of like a bill, and then you'll have 30 days. Then you'll have another 30 days. Then you'll receive what's called notice of preliminary assessment. Mm-hmm. And that means they're getting ready to get to the point where it's going to go to their collections part. Then you'll receive a notice of final assessment, and you'll have 30 days to respond to that final assessment, that notice of final assessment. The bad thing is if they give it to us like a day before that final assessment is posted,
Right.
They're going to have to actually pay that tax before they can do anything about it. So again, I guess we've said it about 10 times.
Right.
When you get a notice, make sure that you act on it or you give it to your tax professional to research for you.
Right. Mm-hmm. And a lot of times these notices, it's good to get professional help because a lot of times they are not correct. Sometimes they're kind of fishing for information or more taxes is what they're fishing for. And I think maybe they hope you're just going to pay it and not, I've seen notices where they're assessing net investment income tax on income that we subject to self-employment tax, which you can be one or the other, not
right.
Not both.
Right.
So it's important to, have a discerning eye, look at that sort of thing.
Yeah. Yeah. And I know the state also does this thing, and I've received several even JMF professionals send them to me and go, "Is this real?" And so what the state will do is if you have a refund pending, they have an identity theft letter where they're trying to flesh out erroneous returns that are filed. And so they'll send you this letter, and it says, "We need some additional information to process your refund," and it'll give you this link that you're supposed to go online and type in this link, and then I think you have to enter in a number that's on that letter. And so those are real.
Right.
Yeah. And so it's a real, you go on the Alabama Department of Revenue website, they've got information regarding that notice, so you can kind of compare to see if the letter that you have is real.
Right. And it's important to note that they're just asking for the number on that letter. They're not asking for your Social Security number or, information that they should already have on file.
Right. The other thing that the Alabama Department of Revenue will do is, sometimes people won't itemize for federal because they don't have enough in itemized deductions, but they will itemize on their state return. And so the state has in their computer software a certain threshold. And so if your itemized deductions are this mysterious percentage, greater than or a portion of your adjusted gross income, they're going to send you this letter and say, we need for you to verify all of your itemized deductions that you've taken on your return. So that's just to say, make sure you keep good records. I mean,
Right.
I think that we recommend that you keep your income tax records for 6 years?
That's correct.
Yeah, 6 years record retention for your return. And Alabama also matches the same as federal too.
Yes. So you can get a matching notice where they think you haven't reported this certain income. And often you have, they can't match to it.
Yeah. I think we've kind of hit the high points. You want to make sure that your information is correct. You want to not panic when you get a notice. You want to forward it to your tax professional. I don't know of anything else. There's any other advice that we can give people, huh?
Right. I would also encourage, like we said, anything you can do electronically will help. So you want to file your return electronically. You want to, if you can, make your payments electronically. And you also want to have your refund direct deposited. Like we saw in the pandemic with stimulus payments, they issued those to your account on file. Otherwise, they mailed them.
Right.
So that was important. And a lot of people get scared, I don't want the IRS to know my bank account. Well, the IRS, they have the ability to levy, to collect taxes due, and that includes taking money out of your bank account. So they can get your bank account information.
Anyway.
Yes, that's correct.
All right. Well, I think that's all that we have untapped today for IRS notices. If you would like for us to help your business, or if anyone has any other podcast advice, they can always send an email to info@jmf.com. And they shouldn't forget to subscribe to our podcast on YouTube or any of the other audio podcasts. Thanks, Lauren.
Thanks, Ken.
If you would like us to help your business or would like to suggest additional podcast topics, simply send an email to info@jmf.com.
And don't forget to subscribe to our podcast on YouTube and your favorite audio podcast apps.